Good morning, good afternoon, or good evening, depending on your perspective on the world, and welcome to the Wendell Effect. My name is Brendan Wendell, Chartered Market Technician, and I'll be guiding you through some of my thoughts and opinions and observations, really, on the financial markets. And this week, we actually have a special guest that's going to be joining me for a little bit of an interview talking about the market. So I'm going to hold off on who that is in just a little bit and get back to you guys. I'm going to go ahead and shrink me down so you can still see me, but really, we're going to focus on what's going on here on the screen. Just a reminder, we're not broker-dealers or investment advisors. We're going to take a look at these securities and these markets from an educational standpoint. I'm not telling you to buy, sell, or hold anything. Markets do involve risk of loss, so don't put any money there in the markets and invest or trade with any markets you can't afford to lose. We are not subject to trade restrictions, so I could have a position in security or initiate one at any time. So if you want to stay in touch with me, obviously we're here at the Wendell Effect. You can go ahead and email me, and please email me as well if you've got any ideas, things that you would like to see me talk about, or people you'd like to have me interview as well. We're going to end up doing a live session, hopefully very, very soon, and that'll be great because I like to get more interaction with everybody and see what you're thinking about the markets and what you think of the Wendell Effect, so we can make this as great of a program as we possibly can together. You can also follow me on Twitter at TraderBDub, and you can search YouTube for the Wendell Effect. You can also follow us on TradingMindsetAssociation.com for more information. Anyway, moving along here, the schedule for today, a little bit different. We're going to start off, as usual, with the equity index futures, then jump into the energy markets. From there, I'll take a look at the sectors once again to give you some idea of what's going on in the broad markets and where to possibly look for stock trading opportunities. And then we'll take a look at the Indian markets as we usually do. But then we have a special guest that'll be joining us and talking about their kind of progression and journey through the markets and how they became a full-time trader. So we're going to kick this off, as I mentioned, for the week of May 8th, on the equity index futures. So starting off with the S&P futures, and you can see there was a positive divergence here on the weekly chart. We had that big move to the downside and kind of impulsing down. We blew through the first target and are heading down towards a weekly demand and that next target. However, it's kind of interesting because when we closed here with that positive divergence, that's suggesting we might get a little bit of a pullback next week. Now, looking at the last week's candle, you can see a big topping tail. That's lots and lots of selling pressure. As a matter of fact, any kind of measurement you have between the closing price and the low, that's buying pressure. Closing price from the high is selling pressure. And as you can see, there's a lot more selling pressure there than there is buying pressure. So overall, we're not seeing that we're going to turn around. If anything, we might get a small bounce to start the week, but that's about it. I wouldn't expect it to really turn and move upwards. I think we're overall on a bearish trend and are likely to continue that way for quite some time. So moving down to the daily time frame, you can see that when we had this little turning point and tried to move back up, the RSI, let me get that out of the way there. Oh, that's right, it's our thing. Anyway, what you can see is the RSI is below 40. So when you get a positive divergence, if you're going to reverse trends, your next low should stay above 40. And the fact that we went below 40 tells me any kind of bounce that we have here, which is actually at one of those Fibonacci extension targets, is going to be a small retracement only. We're not going to reverse trend and move back up. So maybe we get a little bounce Monday, Tuesday, but by the end of the week, we should make new lows. So that's what I'm expecting. Going into the 4-hour chart, we actually already started to retrace a little bit. As you can see, after bouncing, we had a retracement about 38.2%, and that may be all we get. We're really kind of sideways. You see that there's movement above 60 and below 40 on the RSI, and that sideways choppiness is being shown in price. We didn't make a new low, but we made it a higher high, but we're not in an uptrend. So really don't have much of a trend in either direction. As I said, I expect a little bit of a rally at the beginning of the week, but sell off and new lows before the end of the week. On the NASDAQ, we had a positive divergence on the weekly chart. You see we had lower lows in price, continuing our downtrend, but the RSI isn't having it. It's making higher lows, and that suggests that prices might continue to go a pullback. Again, not really a trend upwards, but just a retracement and a pullback upwards. Looking at the bigger picture, or no, sorry, smaller picture, Going down to the daily chart from the weekly, got lots of supply overhead. So even if we do try to rally, we're not going very far. The same thing happened here as did on the ES, where we had a positive divergence but never got a confirmation for a trend reversal. We ended up making a new low that took us below 40 to show us that we're continuing in this bearish trend. So as we drop down to the 4-hour time frame, we can take a look to see what's going on there. And we have kind of a broadening formation where prices are not really making higher highs, but we're making lower lows. And this is a weird formation. It's not a very popular or one that follows through, but it is a formation nonetheless. As a matter of fact, I bring in a little bit of help here from the patternsite.com. Not really the best site. It's very, very old, but it shows that the breakout out of this formation, you can see the pattern right here where you have the same highs roughly, but lower lows. Normally that happens in an uptrend and it leads to a breakout to the upside. Well, in this case, we're having that happen after a downtrend. So the likelihood of a breakout to the upside is very, very low. If anything, what I'll watch for is if we fail to meet this high again, you extend that line out. And if we rally up and fail to meet that high and put in a lower high, that'll be your signal for the breakdown. And that's where I think we're going to end up moving is to the downside. So moving on to the down, not really much going on here on the weekly chart. Some lower highs, obviously. We're still in a downtrend. And we still have momentum. Here we see a positive divergence at the end where prices are trying to make new lows. Actually, right here, we got about the same or maybe slightly higher low already. And we've got less bearish momentum. So the Dow is the stronger market so far out of the Dow, NASDAQ, and S&P. The Dow is a little bit stronger than the other markets, but it's not really going up. It's just not dropping as fast. So we may get a little bit more retracement. You notice these candles with the big bottom tails. That's a lot of buying pressure, but this demand zone is really kind of shot. This is the one I had on last week. We came into that area, and we're not really bouncing out of it. We took a small bounce, but couldn't really make new highs. So again, we failed to stay above 40, so we didn't signal reversal on the 4-hour chart, and that means after the negative or positive divergence, when you fail to get the reversal signal, you're just getting a correction before you continue lower. So this is not the market to short. You want to short the NASDAQ, maybe the Russell, because they're the leaders to the downside. We can actually see that if I go out to my live charts here, and let me minimize this one and go here. You can see I've got all the markets together. If I go out to, say, a weekly time frame, and sorry, the dogs are barking here. Okay, so here we are taking a comparison from, well, we can move it to one of the major highs. So let me just go back real quick and see where we should actually start the study from. So if I go out to, let's see, the ES here, and we go to a weekly chart, for instance, on the S&P, obviously at the beginning of the year, we were moving to the downside sharply, but right there, May 28th, we had that big move down. So if we compare from the 28th on a weekly basis, we are 28th of March, you can see that the big leader to the downside is the NASDAQ. And as I was saying, the Dow is begrudgingly going along with the rest of the markets, but it's definitely not the one you want to short. You want to short the two weakest markets because they're the ones that can give you the best opportunities to the downside. If we take this all the way back to the beginning of January, there we are. Pretty much the same picture. As you can see, the moves down are being led by the NASDAQ and the Russell, pretty much the NASDAQ, really. We rallied up again. That leader gave us the biggest drop once again. So stick with those leaders and short those leaders to the downside and just kind of ignore the Dow perhaps, unless you're trying to buy some of the rallies in between. The Russell on the weekly chart, you see we had that bearish pressure again, very, very low on the RSI. So we actually made a target move right here from our previous impulse. And it looks as though we might get a little bounce. It maybe a bounce, but honestly, it really still looks very, very bearish for the Russell. So dropping down to the daily time frame, let's see what we got going on there on the Russell. We had a little bit of retracement. We moved past this 100% duplication of the previous move. Looks like we're impulsing back down again. So our next target to the downside is 1785. And on the daily chart, we should probably reach that by the end of this week. We had a little retracement, as you can see. We had a move down, but positive divergence leading to that little retracement of about 50% of the previous move. and then now we're impulsing down. So I would look for targeting 1785. Now the question is, where do you get in? Whoops, sorry, go back here. And actually, I forgot to go to the 4-hour chart on the Russell. So if we're looking for the short opportunity, if I go to that Russell chart, let's do that. We want to see where can we possibly get in. So once again, on the daily chart, there we are. We can go ahead and maybe put in a retracement to get an idea of where we might pull back to. So we had that impulse down, and let's go ahead and move this. As you can see, I'm recording this. The markets are already opening up for the day, or for the week, really. We go down to the 240, and you can see there's a drop-based drop. It's not really a great supply zone because there's no real follow-through, but it's just shy, as you can see, of the 38% retracement. Where's that? Whoops, wrong one. One of zones. There we are. No, it's just shy of 23.6 retracement. So a very weak retracement if we only go back to that point, but we got kind of drop-based drop right there. And if we rally, you don't really have any other supply zones overhead, just the Fibonacci retracements. So the other thing I can do is maybe go down to the 60-minute time frame, and there's nothing there either. So yeah, unfortunately, we could just go back to these retracement values and possibly look for shorting opportunities there. That's all I'm saying. So moving along, we're going now to the energy markets, and actually I'm going to go to live charts for that. So we'll start off looking at crude oil. As I mentioned, I'm doing this on Sunday evening as the markets are opening up right now as well. So we'll start off crude oil on the big picture weekly chart. And last week we had a bit of a rally up, but we still don't have a lot of momentum. So I don't expect breakout this week. Instead, I would expect a bit of a pullback, which we're already starting to see, because we just don't have the momentum to keep going to the upside right now. Dropping down to the daily chart, we made the new high, but we're still struggling to get above 60. And because we can't seem to get above 60, we're likely to fall down again. Now, we're still making higher lows altogether, so I don't see us dropping below 100 basically this week. So on the daily chart, maybe we get a little bit of a pullback. We could even put in a Fibonacci retracement from the origin of our most recent impulse up right there. And that's where we're pulling back to possibly some of these levels, one or two of those levels. So if we drop this down to a 4-hour chart, let me minimize this a little more. See if there's any kind of zones we might pull back to. And actually there is right here, right around the 61.8% retracement. We actually have rally, base rally as demand. So if we use the whole range of the body, or sorry, wick to wick right here, we have rally, base, rally, new high, new high. Not a very good move up though. So perhaps we go to just the body instead and narrow it down a little bit. Still not great. Honestly, I don't know if I'd want to trade that. I do see us pulling back as we had a negative divergence here where well, not really. We just made lower high there, but much lower momentum. So momentum's dying off. I'm expecting the pullback, but honestly, I'm not sure which one of these Fibonacci levels is likely to hold. Just got to watch. We're already breaking through, as you can see, the 23.6. After we pulled back from the high, we initially pulled back 61.8 and failed to make a new high. That's kind of interesting here. Let's go back to that daily chart. The fact that we failed to make a new high after we pulled back already from these highs, like I said, you had this impulse up, pulled back 61.8%, failed to make a new high. We might actually be getting ready for some sideways movement or more weakness coming in. I hesitate to say trend reversal because I don't really see it. You know, we've been stuck not getting above 60 multiple times, but we don't break 40 either. So we're just more or less stuck sideways, and it looks like we're making more of that this week. So just be very careful. I'd probably trade this on small time frames just because of the choppiness. There's no real trend on the bigger time frames. So less than hourly, like 5 minutes, 15 minutes, 30 minutes. I would look at those types of opportunities and just trade back and forth in this range that we're stuck in. Moving over to the nat gas. Again, I'll start from the big picture, work my way down. On the big picture, you can see we've got that big move down that we've been experiencing. Kind of a collapse here on the weekly basis. What am I doing? That's an NQ. Hold on. NGM 2022. We already discussed that one. Sorry. I knew there was a pullback. It wasn't that big, though. You see, there's your pullback 2 weeks ago off those highs from 9. Now we're just kind of stuck. Almost a bullish harami we'll see. Obviously, it's only the first part of this week, so we got a lot of time to go yet. Anyway, looking at this, we diverged. So expecting the pullback right now because we made higher highs, lower highs in momentum. Going down to the daily time frame, again, higher highs in price, but lower highs on the indicator. That's very bearish. One other thing I use a lot of is the seasonality of the markets, especially when it comes to these physical commodities. They are very seasonal. And this is a website that I've been using for quite some time called MRCI. If you're interested, you can always subscribe to them at mrci.com. If you use my code, which is my name basically, say Brandon, and the word wealth. Okay, so if you use the word wealth and my name, Brandon, it drops this price by 10%. So you basically get all this information here, which is quite a bit when I go into MRCI online. And it's $341 a year at that point. So you get the 10% discount. And they do a lot of good seasonal information. They actually find you trade ideas for seasonal trades and spread trades as well. So I'm going to go into future seasonal patterns because as a bigger time frame trader, you need to pay attention to the seasonality of the markets to know what is the highest probable direction the price is going to go in. So going into the energy markets here, I can choose nat gas. There it is. And I can actually go to the current contract, which is June, and look to see what is our normal pattern for this time of year. So if I zoom in a little bit here, let's see, there's April into May. So for the first part of May, looks like we're getting to the end of our bottom, or our end of our bearish move. Notice the beginning of May, you're supposed to sell off a little bit, but right there, 8th and 9th, which is what we're coming into, we actually rally at this point. See, Lucy got really excited about that. She's ready to buy some nat gas. All right, so going back to our charts on nat gas, we just did what we expected to do. You see the first week of May, the big sell-off, and now we're expected to rally back up. And we should. I don't see anything else telling us different. We go to the 4-hour time frame, and we pull back pretty much to demand. I mean, that's what you're supposed to do, is pull back to demand and then rally. So we did. Here's the area of demand. Rally, base, 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 and rally. Here we are coming into the demand, holding above 40. So we're getting ready to move back up yet again. And going back to the daily chart, if we take a look at our previous impulse here, and our correction that we've currently made, that gives us an overhead target of 9.355, which again, looking at the seasonal move, well, that should last, the last 30 years, that happened from May 9th until May 17th. So for the next week, we should expect bullishness and a big move up, maybe not as high as we were in April, but according to the chart, maybe we will. We could see that new high being made, probably not this week, but over time. So definitely should see bullishness for the week. Again, going in the 4-hour time frame, look for buying opportunities on smaller time frames. Maybe as we leave this demand zone, you could possibly jump on board with your stop below the current low. And then I don't really have any targets necessarily on the way until we get up to that new high. So our first target really is 9.355. Once again, if you wanted a confirmation entry, you can buy as you leave 8.050 to the upside with your stop below 7.795. Again, target 1, 9.355, target 2, 10.32. And we may get there, it may take a little while to get there. We'll see. So moving along, we got heating oil. And once again, I'll start off with the weekly chart and clean this up. There we go. So on the weekly chart, again, lots of bullishness, had a little bit of a pullback because of divergence. We can also go back on MRCI and take a look. First, crude oil for the June contract. I want to view that real quick. And for the seasonal move, traditionally or typically, it's not really tradition, it's just seasonal moves. You can see the same thing. May usually pulls back, but then this week usually is bullish for crude oil. It's pretty cool, pretty good to know those things. On heating oil, there we are. Same thing. We can go into June and take a look to see what is our normal pattern. And it looks as though pretty much the same. Should be bullish. And then end of May, going into June, we'll start selling off again later. But that's next week's video. Anyway, so we got a little bit of topping going on right now. We had a little pause, but it looks as though that maybe just did a pause before we continue to push to the upside. We see this little pullback from last week. We're still selling off a little bit. We didn't come into a daily demand, which is this. We have a drop base rally right there, or rally base rally. Either way, that's a bit of demand. If we can get back that far, we may only have retraced. Here we go. I think we did pretty deep retracement already. Yeah, 50% right there. That's what I thought. I was eyeballing it, and I usually go from the open of the candles that take you upwards rather than the actual low. And you can see it doesn't really matter. Here it's a 38.2% retracement. There we actually closed right at the 50% retracement. Either way, it looks as though we're getting ready to kick off to the upside again. If we are moving up from right here, we can do an extension where I do go from low to high back to the lows. We project an upside target of 4.3971 and then 4.6996. So moving to the upside expected for this week on heating oil. So we'll see if we stabilize and start moving up. As of right now, we got a little bit of a harami pattern because we got that large candle and the smaller candle inside. Next, we move on to gasoline. Go to the weekly chart first, clean this up. My computer froze there for a moment. There we are. And we have broken out to new highs last week. As you can see, lots of bullish pressure. We actually did make a slightly new high on the indicator as well as we moved up. So, see what's going on the daily. Still very, very bullish. We've been getting a little bit of pullbacks after these big runs recently. So we're getting a little bit of a pullback going on right now, but look for an opportunity to buy again. I don't see it on this chart, maybe the 4-hour. And yeah, we've got an area of demand right there for long. Rally, base, rally basically. Oops, wrong one. And what is zones? Oh, what happened here? Did I say that wrong? Template. Zones. Oh no, I must have gotten changed. There it goes. It just didn't change. So anyway, you have rally, base, rally, and if we pull back to 37153, it's kind of a wide area. Actually, this should be the zone. And stop needs to go under 3566. Now, for the first target, I would use this impulse up, correction down, and projection forward. Target number 1, 3.8748, and then target 2, 4.04. So the first target's almost a 3-to-1. I think it does. It actually makes it because you place your stop below this, and target number 1, target number 2, 4.04. And gasoline should be following the same seasonal move as everything else. So that's what I'm seeing right now for those energy markets as we look through all 4 of the major energy markets. Moving along, we can take a look at the stock market and get an idea of what's moving. And again, sector performance. So I'm going to do this live looking, whoops, wrong one, right there at the charts. Starting off with the sector performance. Now, this is the sector performance versus the S&P 500. So you got to be careful. It doesn't mean you would have made 83% for that time frame. It's just how it performed versus the S&P. If you take out the S&P, actually it was still pretty bullish for the energy sector. I'm going to break this down a little bit, maybe for the last week or so. There we go. In the last week, you can see that we were still extremely bullish and inflationary in the energy market. That's really the shining star. A little bit of safe haven moves into utilities, but for the most part, everything else was pretty flat or negative. You can see real estate was very badly beaten up, and so was discretionary, but energy is still very, very good. We could take a look at that energy XLE to see, is it going to continue to march to the upside, or are we done? So let's start with a fresh chart. We'll go to the weekly here. And on that weekly chart, let's see what we got going on here. Still impulsing, breaking out to a new high last week. Problem. You can see we don't have the momentum to sustain that kind of a move. We're going to have a bit of a pullback, it looks like. That RSI is showing that the weakness is coming in. we've got a lack of momentum or commitment to that bullish move. So when you make new highs, you should be doing it with higher highs on the indicator. Otherwise, you're going to get pullbacks. So we'll see if this pulls back into where. Doesn't mean the trend's going to reverse necessarily. Okay, don't read too much into that. The trend reversal will come as a signal after this divergence confirms. And we could still go higher. So this is not necessarily a high that's put in yet. Looking at this time frame, the daily, it's pretty much the same picture. You see, let me clean that. Now it's a chart here. You can see once again we made highs here, and we're not getting the same highs on the RSI, even though we're getting new highs in price. So we've had a little bit of a pullback already. Let's see. There's an impulse up, correction back down. Didn't really hold any particular numbers, but if that was our impulse and correction, we are now continuing our move to the upside here. And therefore, we've got targets overhead. And the first target is 83.74. The second target would be 86.75 for the energy market. Again, that's the ETF that follows the energy. That's XLE that I'm charting right here. So it looks as though we still got movements to the upside going on, and we might still see more bullish pressure this week. So if that's the case, we can actually break it down on that sector going into the map of the market for this week and take a look at last week's performance. And under energy, you can see, look at how green that is. That's the only sector completely green. So if we want to see who are the leaders to the upside, we zoom in on that area. You got Chevron, Schlumberger was huge. So let's see, is that still possible that it's going to continue going up like that? Obviously, it was one of the big players that moved the market upwards, but doesn't have the power to keep going. And I wonder. If we pull back on the energy sector, this is going to tumble. And the reason why is we tried to come up and make those highs that we had before on the daily chart here, and you can see that we can't get above 60. So we couldn't make a new high, number one, that's an issue. And number two, we've lost momentum, and we don't have enough bearish momentum to go anywhere, but we might pull back here. So I'm going to drop down to the 4-hour time frame and look for a shorting opportunity perhaps. Figures I don't have a good supply zone to short. So if I'm looking to buy again though, because this was one of the better performers, here's where you want to buy on a pullback. Right there. 39.87, 40, 48, looking for a possible long opportunity. Wasn't the best move out though at that area. You know, I might want to wait for better buying pressure here, because you don't want to see a red candle start off demand. That doesn't make sense, right? However, this does. You got kind of a rally off the low, base, rally with follow through. So I'm going to write this down real quick so I can go ahead and follow up on this throughout the week. And next week, I'll follow up on it with my Twitter account. So if you're following me on Twitter, you'll see some updates throughout the week on that. So we're looking at Schlumberger, 240, looking at a buy area of 38.31 to 39.20. Okay, so again, I'll be keeping an eye on that, see if we can get that pullback and another buy opportunity for that strong stock. Going into the daily again, so we'll see. That's about it. That's all I really have. So I don't really have a good shorting opportunity. I was trying to see if there's a way to get in for that pullback, but honestly, this is not a great short area. You do have rally, base, 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 drop, but it's kind of choppy here. So if I'm trying to mark this as a supply zone, it doesn't look great, and we're bumping up against it again. There's no divergence. You know, prices made a high, so did the indicators, so I'd be patient on this one. Go down to a 60-minute. And the only other thing I could possibly play on this, again, I'm trying to see if there's a counter trend opportunity to get short, maybe the trend line break. And this is not even the best trend line picture here. If I go to extend right line, there we go. Just trying to see if I have 3 touches. Well, 1, 2, 3, never close below. So if we get a close below that trend line, there may be a trend line break short opportunity from approximately 42.75, targeting 39.20. TLB short, and we'll see if that works out. Okay, I just mentioned trendline break. My buddy Dan Sugar is probably smiling somewhere in the world. Anyway, so that's our first sector look. We can take a look to see, again, with energy, if there's anything else that we want to play regarding that hot sector. And I mentioned Chevron. EOG is also very hot. Look at that, 13.24% EOG. Geez, there's a lot of them out there. Oxy, look at that, 17%. That whole sector's been on fire. So if we take a look at EOG, as I mentioned that, you see how bullish it was this week. Go to the weekly chart, and there it is, just boom. There we go, earnings driven, that's why. So we got a lot of movement based on the earnings, but this is going to pull back. We don't have the momentum to sustain this. Notice we moved up very sharply, but the momentum is not there, and we're probably going to pull back. So if it does, two things. One, is there a short opportunity on the counter trend? Number two, is there a way to join the trend yet again? And there is an area of demand here that looks a little bit better. So if you're looking for a long opportunity on EOG, you do have rally-based rally here as we broke out of prior highs to maybe pull back and resettle. So this is EOG, and we're looking at 112.10 to 118.46. That is a possible buying opportunity as we pull back right there. Still very strong. I don't see any reason not to continue on the long side. Go into that weekly chart. It's bullish, just pulled back. That's all. Right? We had a small correction. Let's see here. It looks about a 50% retracement what I'm seeing. Look at that, dead on 50%. That's what I thought. You start to eyeball it, you get an idea. So since we did a 50% retracement, we're now on our new impulse up. So if we're looking for targets for that long, let's see, we got 134.23, 152.79. What's 23? 152.29. A couple targets there. Interesting. So we'll see. That might be an opportunity if we start turning around here at the 134 as we hit that target before we pull back. There might be a small counter trend short there as well. And the other one I was mentioning, which was, there we are, Occidental Petroleum. We can take a look at Oxy. Pretty much same picture. Occidental Petroleum had that big breakout again. This one, earnings have not been released yet. So we have earnings coming up, looks like. So be careful there. If we do look at our previous moves, now I guess we had this as an impulse up, correction back. We're almost at our target of 67.40. If I go down to the daily chart, first of all, we are losing momentum. Notice we don't have the same highs as we did before. That's not good. That means there's a pullback coming. Going into the daily time frame, let me reset this a little bit and clean it up, actually. There we go. So putting it back with the extension that I had before, it was this. Yeah, 67.40 is our target. Again, we see good movement up, but we'll see if it pulls back. I don't really have a good entry here. As far as demand goes, it's kind of weak. You have rally, base, rally. So best guess at a demand zone would be that. It just doesn't look very strong when you leave the area, so I'm not going to trade that. I want something stronger. That's on the daily. We go to the 4-hour time frame and see if there's anything there. And on that 4-hour, no, I just passed. Look for something better. So as far as any other sectors that are bullish, if we do start sliding downwards in the markets, you should see staples and healthcare start to rally a little bit. So if we continue the selling pressure on the Dow, the Nasdaq, the S&P, and the Russell, look for those sectors to possibly perform a little bit better. So we can take a look at the staples, and that would be XLP. As you can see, we'll go to weekly. We've got a lot of selling pressure as the market dropped. It dropped as well. Didn't go into bearish territory though, so still relatively bullish. And if there's more of a flight to safety, there may be some opportunities there. If we take a look at the consumer staples, it's going to be up here. Up the cyclical, there's defensive on the right. It looks as though things have been holding up. We've got packaged right there, packaged foods. Kraft Heinz Company. So KHC, also Kellogg's looks pretty good too. So those stocks held up pretty well. We got KHC. And on the weekly chart, you can see it's stalling out before it reaches new highs, but lots of momentum. So if we get a pullback at all to a demand zone, this, and it may have already done it, you see the pullback here, possibly ready to continue the move up. Just trying to channel a little bit to the downside. And it might be done. So we may have missed this one. As you can see, it was a strong stock in a strong overall sector compared to other markets, and we've broken out. I would wait for a retest of this trend line for a possible long opportunity, and we could drop down to the daily chart to see if there's any opportunity. I'm sorry, the 240, we're on the daily. And, oh, well, there's demand down below a little bit here. That's about all I got. Either the retest of the trend line on the daily chart, or if it breaks that and goes into this zone a little bit, we got to stay above 40. As long as we stay above 40 on the pullbacks, we'll continue to break out. You can see this was a retest right here of a prior demand zone. It's a bit higher right there. Okay, you have drop, base, 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 rally. And when we came back to that area of demand, RSI could not get below 40, and we were able to bounce nicely. Couldn't quite get to some new highs yet. As we see, we're hitting some supply right now. So get the trend line. There may be a bit of a counter trend move to begin with. You got to be careful though. Okay, as a counter trend trade, you got to be willing to get out pretty quickly, because this could be very dangerous. We based and moved up slightly, but if we do continue to break down, there may be a short opportunity targeting that demand zone. So you could potentially sell as we leave 43.34 to the downside. Stop, and you could probably tighten it by putting it above the recent high right here. And that would be, was that 43.67? Yeah, so let me write this down. We're looking at KHC short. I'm going to break down of 43.34 with a stop 43.67. Target 42, we'll call it 60. Want to get out before you hit that demand zone. Then you got a long at 42.41, and that should take you up to some new highs. So we'll see what happens with Kraft. Go to Kellogg, take a look at that one as well. And we've already broken out to the upside. So if we do get a pullback, there's a demand zone here we'll have to look for. Let me take a look at the big picture first, though, before I go any further. On the weekly chart, it's a little bit of a breakout right now, and we have momentum to carry us forward. Just kind of ugly altogether, though. But you see, we had that pullback, big breakout, and momentum carried us higher. So that's an earnings play. Obviously, it must have had some good earnings, and well, we'll probably get some pullback after that. Oh, I'm trying to go to the daily chart here. Again, you see the earnings reaction, and we actually followed through to the upside after the earnings. So it must have been good earnings, obviously. I don't know if this would be a good demand zone to buy. I'd probably look for something on a smaller time frame. Yeah, like where we saw this on the 4-hour, right here. Doesn't have the follow through, so I'd be hesitant to trade this one. Maybe look for something better. Anyway, what else do we have here as far as sectors? We have healthcare as well, and we can take a look to see. That is XL. Oh, is it H? No, I forgot what it was. Blanking out here for a second. XLV. Okay, so XLV is the healthcare sector. And if we go into the weekly time frame, again, not the best looker as far as the chart goes for the bullish trend. We pulled back quite a bit, but notice on the weekly chart, we moved into a demand zone now. So healthcare is actually poised to make a move upwards. We went really deep into demand, so it's not going to be a great mover upwards, but we hit demand and held above 40 on the RSI, so that means we're likely to go up. You see, it happened before right here. Kind of drop, base, base. And it's inside, but it actually worked pretty well. You can see, as long as you hold above 40 on the RSI, like we did right there, prices move up. And it moved up and made a new high as soon as we were able to get above 60. So basically we could have a deja vu all over again, right? Looking for an opportunity as we're pulling back here to buy on the pullback. Really, we could wait for confirmation as we break out or break this down to a smaller time frame, maybe on the daily time frame to see. Nope, nothing there. This does not look as good on the daily. The weekly looks like it wants to push up, but the daily doesn't. So I might have to wait on this one. You can see on the last move, again, let me go to the weekly and compare what happened before to see if this is still a good opportunity. So yeah, drop-based rally, we came in right here. Go to the daily charts, and there we had a positive divergence. That was the signal to go long, right there. That's what we need in order to be able to go long again this time, because we're below 40, right? You're not supposed to buy if the RSI is below 40, means demand will not stand. But we even violated the demand a little bit, so it worked. But we did a positive divergence, and this is what I was talking about, to know that you're going to change the trend, confirmation. So we came into this demand zone. Again, it was a weekly demand zone. We came into it, patience, came into it again, positive divergence. A signal to tell you that you're okay to go long. We move forward, and right there, there's a low being made. And when that low was made, we were not below 40. That's confirmation of trend reversal. What we saw before was a divergence, but we didn't get that confirmation afterwards, and therefore we never got a trend reversal. But that right there tells you this is going to continue to go higher and make new highs. Sure enough, on the weekly chart, it actually made a new high after that divergence right there. Look at that. So same thing, we're going to look for this a second time as we're coming into that demand zone. I go down to that daily time frame. Here we are. And if we make a low and we make a second low soon, but the RSI doesn't make a new low. So if we can break just a little below 127.47, but the RSI doesn't go below this previous low, then you're going to look to buy. Then if there's another pullback afterwards while you're in the long and we don't go below 40, oh, you're sitting pretty at that point. You'll break out the prior high. If we don't, you'll have to get out here. So if we make a positive divergence, only if we make a divergence where we end up turning around after a new low is made. So basically what we're going to be doing is this. Price will make a new low, but the indicator can't. What you can then do for your entry is buy, and I know you got to be patient, wait, but you can buy as you break out of this 131.94. And you place your stop underneath the recent lows or maybe one ATR. Now, if that happens and you get another pullback at some point, this, that'll probably happen. You get a pullback, that's going to be the critical sign, because on that pullback with the RSI, you need to see, do we stay above or do we go below 40? So if we go below 40, then that supply zone will hold on this move up. You'll have to get out. However, on this pullback, if we do not go below 40, we're going to continue going. That'll give you a higher target. So that's what I'm going to be looking at for the XLV healthcare sector. I'm not going to continue going down into smaller time frames, but I can look at stuff throughout the week as well and let you guys know if I find anything on Twitter. All right, so that's a little bit about some of the markets I've been watching. Okay, so let's see. We've got India to look at. So continuing on with India for this week. On the Nifty, we've been in a downtrend, as you can see. Lower highs and some lower lows. We haven't lost made our next low yet. We're losing momentum. We can't seem to get below 40. I mean, this was last week and we sold off pretty well, so we'll see. If it continues, we need to make a new low on the RSI to continue the bearish trend. On the Nifty daily chart, you can see that we're still moving down quite a bit, and we broke 40 on the RSI. So that's extremely bearish and suggesting we're going to continue to move down. And if we do, this demand zone has been tested. I don't imagine that's going to hold. The fresh demand zones will be the new downside target. So it looks as though on the Nifty, we got a lot of room to go to the downside. So be very careful and look to make shorting opportunities. Even on the 4-hour time frame, that tested demand zone down here is not likely to work. I didn't really have any great supply zones for shorting opportunities, but just have to wait and see if any develop during the week. Now, additionally, looking at Reliance, which is one of the big leaders in the markets for the Nifty, overall, it's looking pretty bearish. We had a pretty deep retracement here, 78.6%. So we retraced almost as deep as you can without turning around here. What I'm going to watch for, sorry about that, my phone. What I'm going to watch for is now that we pulled back and formed that candle, that was the daily candle last week on the very last day of the week. Basically, what I'm going to look for now is which way do we break. If we break the high of that candle, great, we're likely to continue to go up. We're staying above 40, so we should. Still looking bullish. We had a little bit of a divergence and a pullback, but nothing major. So if we end up breaking the high of that candle, 26.56, expect us to continue up, could even make new highs, and that's going to hold the Nifty to the upside. But if this candle breaks to the downside first, look out below. You already saw there was not much demand around on the Nifty. This could drop very, very quickly to the downside. So keep an eye on that. And we had earnings come out, by the way. That's what the E is right there. And you can see that they actually missed the earnings per share estimates. They beat revenue overall, so that's why it was kind of indecisive back and forth. So we have a green candle, but we do have lots of selling pressure on that green candle. So this is not looking very strong. And with the miss on the earnings, revenue is good. That's a little bit more important than the actual earnings, I believe. Forward-looking revenue and revenue that they had is positive. So that may hold up price a little bit. But again, if you break that low of that candle, look out below. We're going to continue to go down and take the Nifty with it. So moving on to the Bank Nifty, still in a downward trend as well. Lower highs, lower lows. You can see that we've lost most of our momentum. We can't get above 60. We can't get below 40. We really have almost no momentum. And overall, just kind of sideways and choppy right now. So a little difficult to trade and find a clear direction to trade. On the daily chart, we are coming down towards this area of demand, 33,263. See right there, we had drop base and not the best of demands. It is a drop base rally, but not by much. The nearest demand zone that's untested, this one's already been tested at 30,000. That's 25,891. So look out if we end up pushing below that demand. We have lots of momentum to keep going down. So it doesn't look like the demand zone is likely to hold. You can see we were below 40 before. We snapped these previous demand zones, went right through them. So we're likely to do the same and move to the lower zones. On the 4-hour chart right here, the demand I put out, this was from, I think, a week ago or 2 weeks. No, it's a week ago. I believe I posted that, a little bit of demand here in our videos from then. And we held. We hit it. But you can see we're below 40, which means next demand is likely to be hit. And I said it was around that 25,008. Yeah, right there, 25,891. So unfortunately, we might just get a little bounce out of this and continue to move to the downside. There is a possible supply. Doesn't look great though. Drop, base, base, and the gap down. So keep an eye out for this. Okay, so that'll take it for the Indian markets. All right, so moving on, we've got a special guest, my first one for the Wendell Effect. So I'm kind of excited about this. I'm going to be showing you a video with a little bit of an interview that I did last week with a very special person. Her name is Cathy DeClemente, and Cathy is primarily an oil trader. She'll tell you her story, really. I first came across her when I was instructing for Online Trading Academy. She was actually a student of, not necessarily mine, but she ran into me in some of the XLTs. But anyway, I don't want to get too much into it. I just want to have her tell her story and sit back, listen, and enjoy. And after the interview, I will see you again next week and have a great one. So I'll talk to you in just a little bit. All right, so welcome. And I want to introduce you, or actually, if you want to go ahead and introduce yourself to my my listeners here, but my watchers.
Sure. Yeah. Thank you for having me on this call. My name is Cathy DeClemente. Trying not to be so formal, but I'm a day trader in futures, and I know you from back in the day at Online Trading Academy. So I've watched a couple of your videos back then. I see that you've branched off and now you have the Wendell Effect and some other cool projects going on. So I'm happy to be a part of this.
Well, thank you. Thank you for coming on. I appreciate you kind of chatting with us a little bit about what your experience has been in the markets and sharing your background as well. So, basically, I mean, how long have you been trading in general?
I feel like it's been 30 years, but I started trading back in late 2014, early 2015. And I started with Forex, to be honest, for about 3 years. And I realized that it was just not for my personality type. A lot of the trade, I mean, it's just my experience, but a lot of the positions would end up hitting over London hours. So I tried getting up at 3 in the morning Eastern time. That didn't work for my lifestyle. Then once I was in the positions, they would take days to hit my targets or get anywhere. So it was just a different lifestyle, and I ended up navigating to futures, and that really fit me well.
Okay, so I mean, how did you get involved in the first place? What got you interested in getting into the Forex or trading in general?
Oh yeah, so my background's in finance. I went to school, got my MBA, all that stuff, and I'm from New York originally. I live in Maryland now. We moved down here 2 years ago, but in New York, of course, the track for your MBA and all that stuff is to be on Wall Street. So of course I started there, worked there for, let me see, 21, about 7 years. I worked at JP Morgan Chase, worked at a couple of different, even smaller firms too, worked with bonds. I was all over the place. But at the end of the day, I had no soul after those 7 years and no personal time either. And, I was even some health issues, to be honest, regarding the stress of that kind of lifestyle. Because, you want to chase money when you're in your 20s and you want to chase that kind of lifestyle, but it really wasn't for me. So I said, I have such a passion for finance. I love the market so much. How could I do this? But how could I have a lifestyle that makes sense and better well-being? And coincidentally, as soon as I started having like this crisis, this thing, I got an marketing email from Online Trading Academy for a weekend seminar. And I was like, okay, let me go to that and see how it goes. And I ended up going, fell for it, for everything in terms of just the excitement of trading. And, I saw dollar signs because, what you see when you first start trading, you're not even hearing anything else. And to be honest, at the same time, it was like the perfect storm of events. At the same time, I just finished reading Tim Ferriss's 4-Hour Work Week. I don't know if you ever read that, but I literally was ready to just like burn all my stuff, get ready to live my 4-hour work week. It was crazy. I ended up leaving my full-time job. Yeah, I had like a whole dream, a mini retirements. I had like everything ready. So I left my full-time job, which I don't recommend to most people. But I would say this, especially for like someone starting out trading, I didn't leave everything. I was a math tutor, a private math tutor for the afternoons. So one of the key parts, and I'm very grateful that I did this, was not to give up my income, like 100% of my income, because, as we know, the second you want to rely on trading when you first start, you're going to burn through it. The pressure, the money pressure, you can't have that to be successful, in my opinion.
Right. So I just had that backup knowing there's another source.
Exactly. So the financial pressure was not there. I could do that in the afternoons, and in the mornings, I could focus on learning how to trade and becoming a professional trader. So that's kind of how I navigated from Wall Street over to being a self-employed, trader.
Okay. So obviously you said you went through that online trading academy. Did you do any other education outside of that, or have you continued on with your education?
Oh boy, I continued on. I continued all over. So, I mean, literally my story is like a photocopy of what every trader kind of goes through, extra hungry for education. I went through Online Trading Academy, and like I said, I did Forex first, and then I went to futures with them as well. But their style of trading wasn't really resonating with me. So I started branching out a little bit and seeking online sources. I did, pay for some other programs. I did it, you waste a lot of money on looking for like this perfect system. And, part of that's just self-discovery as a trader. But outside of that, I navigated to Sunil Mangwami. You know him. He's with Fib Forex 123, and he's been actually my mentor for many, many years. So his style of divergence trading and using Fibonacci ratios, that's like, I love numbers. I love precision like that, calculations and things. So that really resonated with me. And since then, I kind of developed my own style. I dropped trying to look for the perfect system. I created my own system.
Okay, great. Hold on just 1 second. There's a gardener literally with a blower. I can only hear half of what you just said. They were literally in my backyard, but I had my mic
No
muted,
problem.
so I guess you couldn't hear it. Okay, give me a break here. Okay, so let's see here. There we go. Okay, so what do you focus on right now when it comes to your trading? Is there something you primarily focus on? Is there a certain time frame you look at? What is it that you're trading?
So I'm trading right now. I'm focusing not now for the last couple of years. I would say maybe 3 to 4 years. I focused primarily on crude oil futures. So before that, when I first started, just so you can see where it went, I went from wanting to swing trade Forex, and then all of a sudden fast forward and I'm doing NASDAQ 1 minute candles. So that was an extreme smack in the face of like the difference between the styles of asset classes. But anyways, I ended up, that was too crazy for me. So I started doing crude oil futures, which is still crazy, but it's the first instrument, truthfully, that I've stuck with and just learned it. And that was one mistake I made when I was doing Forex, because Forex, you have so many pairs. So you kind of look at it like a bundle sometimes, when truthfully, they're all kind of different. I know obviously you have like correlations and things like that, but they all have a little personality. And crude oil was the first instrument that I took the time to know the personality, but it took me, I would say, 1 good year of, hundreds of hours at the charts, lots of mistakes, lots of, reviewing myself over and over until I started to get comfortable with the system and the personality. But so yeah, just crude oil futures. I traded in the mornings between 8 to 11 a.m. Eastern time. And the charts that I'm using, I use multiple time frame analysis. I think you do too, right? Is that sort of?
Yes, I do. Yeah, of course.
Okay, yeah. So starting from, I use daily and 60-minute as my highest time frame, super big level areas, trends, and then I actually love on a smaller scale for execution and intermediate time frame. I use tick charts, and they are so awesome. Like in terms of keeping me out when things are not moving, it screams at me in tick chart formation.
So I mean, it's kind of important. You found the personality of a security that really fits your style of trading. And then, of course, you just said that you found the type of chart that really fits your style of trading as well. So you really kind of honed in on what is right for you as an individual.
Exactly. And that took a long time, honestly, Brandon. Like I went from, it's just iterations and it's how you develop as a trader. I went from using, I would say 5-minute charts as and actually when I share a chart with you guys later, it's a 5-minute picture, but I don't trade the 5 minutes. I trade on a 200 tick chart. And that used to be a 1,000 tick chart before the Ukrainian crisis, when I was able to have my stops around, let's just say on average, 10 tick stops. But with that, on a 1,000 tick chart, that was turning into 30 ticks now for my setup style. So you got to learn how to adapt, and I've had to scale down to a 200 tick chart now in order to manage my risk.
So yeah, exactly. It's part of a risk management thing where sorry, my dog is going nuts. Anyway.
Oh, look at this trader in training.
Yeah, I know. Anyway, the gardeners are outside, so she's going crazy when they go. Anyway, Aww. So I was going to say is that you recognize the volatility change. Okay. You recognize the change of volatility, and obviously to adapt to that volatility, you shorten your time frame. Oh, now the other one's jealous. Here's Pascal.
How many of these do you have?
I have 2. This is Pascal. He has 1 ear up and 1 ear down, and it's his actual birthday today. As a matter of fact, it is his birthday. He is 3. Yeah, that means you get cookies.
Oh, Pascal.
He's 3 years old. The other one was 6 years old, but yeah, sorry.
Oh my God, they're cute. Look at that. They think they're cats sitting on your lap like that.
Oh God, yeah. Anyway, he's a big guy. All right, there we go. Sorry, see my green screen in here too. Anyway, we were talking about trading, all kinds of things. You never know what'll happen here today. But let's see. What do you enjoy most about the trading? I mean, you started talking about the 4-hour or 4-day work week. Did you ever get there? I mean, do you see yourself as successful? What do you like about this?
Truthfully, honestly, some days you'll feel like, oh my God, what am I doing? Am I getting anywhere? But then when you look back and you're like, wow, even I'll physically look back at like my journals and I'm just like, how was I trading before? Like, what was I doing or thinking? You start to see that you've changed so much. And, that in terms of success, and like, if I had to think about like, am I successful? Because I do question that sometimes. One of the biggest aspects, Brandon, that like has been monumental for my life is the time freedom I have now. And I don't have to be a millionaire to have that. Just literally literally being able to, like, for example, after this call, I'm going to go out with my 60-year-old friend, because all my friends are like 60 net plus now, because they're the only ones available during the middle of the day. We're going to go ride our Harleys out. Oh. Who could just take an hour or two and go enjoy that? So no boss, no 9 to 5, set my own schedule. I can go to the gym, take care of my health, which I could barely take a lunch break when I was on Wall Street. I'm not shooting down Wall Street. Some people, that's the lifestyle for them, not for me. And so just that time richness that's one of my biggest success factors, I would say.
Yeah.
And being able to take care of myself, have the time to take care of myself, my health, because if we're not okay physically or mentally, we're going to fail as traders.
Absolutely. Yeah. I know. So when I asked about the question success, it wasn't a number thing. It wasn't a money thing at all, because that's the way I measure it, is that, are you able to do the things in life that you want to do? I mean, that's kind of the reason why we do this. I think, I can't speak for you, but I know for me, I trade and I also teach trading because I enjoy it, but it allows me to have the lifestyle that I want.
Exactly.
You mentioned the Harley. I got a Harley too. What do you ride?
Yeah. I'm embarrassed, but it's a Street 500 little baby bike.
That's okay. It's 2 wheels. It's fine. I got a soft tail. So.
Oh, that's beautiful. Okay.
Yeah. So it's a lot of fun. Let's see. Well, again, you've been through a lot of trials and tribulations. You talked a little bit about your successes and things you went through. What do you think holds people back from being truly successful in trading? Do you think there's anything that they need to kind of overcome as they're listening to you today?
Yeah. So there's a few things that I always think of. Like, first of all, I tell my friends, those that are getting into trading, like I give all the speeches that, we've heard when we first started. And part of it is, you're going to hear it, but I think a big part of it is you have to go through it, because nothing beats like paying for those lessons. I don't think anything beats it. It doesn't matter how many times you've heard it. Trust me, I've had that mentor for many, many years. He said stuff 3 years later. I'm like, oh yeah, okay. I see why he said that. It took me so long to internalize it. So
feel it to really understand what they're telling you.
You have to feel it. So some things that, like if I had to list a few things that would make you a really good trader, I think, or improve someone as a trader, someone who's, and I'm just talking off the top of my head, not just my own experience, but I've had a lot of trading partners over the years, just for like accountability, and also, it could be a lonely field because we're sitting at our desk by ourselves all day. And they've come in and out. I've lost a lot of them along the way, not physically, but like, in terms of professionally, because they couldn't make it through. And part of it was nobody wanted to do the grunt work. Nobody wanted to journal their trades or review it. That's like the part that, like, no, they just want to be active. Right. So you got to do you have to do the other part, because I probably have, in 1 year, with all my pictures I would take and like the journaling, I probably amplified my learning curve maybe 3 years because of that review. I saved a lot of time. Didn't feel like it during it, but so
right. Yeah, it's a slow grind, but it actually pays off.
Exactly. Oh, it pays off so much. So someone who's willing to do that part of it, I think they're really gonna have a better chance of succeeding as a trader. And the other thing is the flexibility component, because how, like I was telling you, that I had to switch from 1,000 tick chart to 200 tick chart. Flexibility and adaptability. So when the Ukrainian crisis hit, I've only been trading like 6-7 years, but I never had an instrument that was impacted by a war. An already volatile instrument. Of course, oil is impacted by a lot of things, the weekly report, but I've never seen a situation like this. So it was my first time, and my strategy, I couldn't, the risk, everything got shifted. Everything didn't make sense anymore. So I had to take a step back, and I had to take 2 weeks off from trading. Just observe the situation and see, how can I adapt to this? How can I still trade the way I like to trade, but it has to make sense in terms of risk management and my tolerance? Or should I just start a new instrument? Sometimes you got to do that too for a little while. So all these little things of like, being flexible, doing the grunt work, reviewing yourself, facing yourself, that's gonna help you become a successful trader. Those are things I personally have had to learn how to do in order to be here this long.
Yeah, great. Well, as far as the strategies that you use, is there anything you could share with us? The things that you're doing right now. If we could take a look, I mean, if you want to share some charts, whatever you'd like to do, just kind of let us know a little bit about what you do as a trader.
Yeah, sure. Okay. So I had, like I said, I have like thousands of photos for my journaling. So I have an example here. This is from, hold on, let me share my screen. Okay, let me just start with my higher time frame idea. So just to kind of walk you through, I mean, obviously it's like a whole strategy and a system. So it's a little bit hard to explain in a short amount of time, but just like broad pictures of what I look for. Yeah. Like I said, I'm looking at the daily and the 60-minute for a lot of information. So actually, you know what's even better? Let me go down right down to my smaller time frame because I can show you what I'm trying to say here.
Okay.
Sorry, the picture's a little bit blurry. Sometimes the photos come out like that. So this is a 5-minute chart. It's not my execution chart, but it's close to it. A 200 at this time, 200 tick chart would probably be around a 1 to 2 minute, almost equivalent chart. So something that really helped propel me forward with my analysis is being aware of the context of the day. So when I show up in New York Open, let's say 8 a.m. I'm at the charts, right? I really care about what did London do overnight, and I really care about where are we compared to the previous day price action.
Okay.
So those two pieces of information can almost give me my entire like plan for the day. So for example, if we're trading inside the previous day range, which this is right here. Can you see my markings?
Yes. Yeah, I got it.
Okay. Wow, my really crooked line, that's bad. So that's the previous day on this side. So when I woke up, let's say 8 a.m. around here, I could already tell we're inside the previous day range. So right there, that eliminates a few different strategies that I have, and it puts me into a focus of one kind of strategy that I do, which is I'm paying attention to the ends of the day, the ends of today, the overnight, and the ends of the previous day. And I want to see what happens there, because sometimes we can just stay inside the range. So that's context number one. Then I'm also paying attention on the higher time frame, which, let me just pull up that. The higher time frame one here is a little bit cleaner. This is a 3,800 tick chart. It's my intermediary. Okay. I'm trying to pay attention to where are we in terms of structure. So a lot of people can start to see like impulsive moves. If you're all going in one direction, that's impulsive. You got a little pullback. You got the move climbing up. So we already broke highs. So my focus, my bias is to go longs, but I have to find the right area to do that.
Right. So your overall focus is that, okay, so far today, if I'm following this right, is that you had kind of an inside day. So you're not expecting gigantic moves perhaps, but you're seeing the impulses up. So you got a bullish bias. You're going to probably look for buying opportunities
near the lows of the day. Exactly.
Right.
Exactly. Okay, cool. That's all. Cool. Exactly. So, and then, so that's basically what I did. Like I said, I'm a big fan of fibs. I really like the deep fibs, 78.6 to 88.6 areas. Okay. And, that's sort of how I'm executing that idea. So sorry, jump back and forth. You can see like my setup here. Now this is MCL. These are the micros, which have been a blessing also. Because when I need to scale down risk because of news, I just go to the micros. There's nothing wrong with that. And
that's one of the best ways to adjust your risk. I mean, you either have size, duration, or frequency of trading, and the size is the easiest one with these micros. They're awesome.
And you can also, it's easier to do multiple positions. And I'm a big fan of multiple contracts. So you can ride a couple of them, scale out. Yeah. I'm a big fan of that. This is only one position on this one, but usually I do at least 3. Okay. So that's kind of like my style. In terms of the higher time frame, just one little thing that I use to assess key areas of interest. Some people use support resistance, things like that. I really enjoy weekly floor trader pivots. I don't know if you ever use those, but
you're using the weeklies?
Yeah, I use the weeklies.
Okay.
So that yellow line there is the weekly floor trader pivot, high plus low plus close divided by 3, for those who don't know. So you can see the interaction with it. Once we're above it, that's also a bullish signal. So,
but you're using the high, low, and close, the weekly high, low, and close divided by 3, right? Not the daily, like
exactly.
So interesting.
Exactly.
Okay.
Yeah. So you'll tend to see interaction. Of course, it's going to overshoot it a little bit because it's a weekly and you're on like a little time frame.
Right.
But you'll see it uses it like a level many times. And that can give you a little bit of a signal for which way direction the week's going to go. We're above it, we're a little bit more bullish. Sure. Exactly. Yeah, exactly.
That's great.
So that's pretty much it.
Okay. Well, thank you for letting us have a little insight into what you do there and kind of what you've been looking at. Now, you have a website, The Elite Chartist. What is that all about?
Yeah.
Do you want to give a little plug if you want?
Sure. I mean, to be honest, I started Elite Chartist a couple of years ago, and it was really the main reason for it was to start to become more professional. Like, this is a business. So now I have a name. It's not even Cathy DeClemente. It's Elite Chartist, and you're going to be a professional trader now. So that was the main reason for it. But now I actually have a couple of mentees that I'm working with. I really am a big fan of one-on-one because I can really watch and develop and kind of help them along the way. So I'm kind of a little bit busy with that. But one of my goals is I do want to put out some content like on YouTube and kind of show people a little bit how I trade crude oil futures. Maybe I can help some people out. So I don't have a channel right now, but I would say I do have Twitter. So at Elite Chartist. I will put it out in there so people can find out like when I start putting out the free content.
Maybe we can help you out with that. You know, I got mine going right now, so hopefully maybe we can spin off and help you out with that as well.
Oh, that'd be awesome. Yeah. I'm very like niche, like I'm super like crude oil, but you know.
No, that's great. I mean, like I said, a lot of people, there's different ways of trading. I always believe that you can be kind of like a doctor where you're a general practitioner, the family doc, they see everybody. So the trader just kind of scans the entire market and tries to find certain setups that they're comfortable with. But I prefer like what you're doing, where you're more of a specialist and the specialist focuses on one style of medicine. Your medicine, in your case, is trading that short term on the crude oil. Now, the specialists may not see as many patients, but they have a higher probability of success because they know exactly what they're looking for and they focus. And I agree with you regarding that. I kudos to you because I feel that is very good. I have a little wider group than just that one security. I do about 6 securities myself, but I do believe that that's a great way to trade. And as you said, you kind of had to mirror or marry it to the style, the personality of the security with your personality to find out what really works best. And I love that you said you're not completely stuck with it either. You're open, you know, things change in the markets because they do. They obviously change. You're willing to change with it too, and might even be to find another security. So
yeah, and I want to branch out eventually because I like a little basket, kind of like how you have your 6. But I'm sure you've built up over time, learning the personalities of those 6.
Right.
For beginner traders and even like maybe intermediate, like it takes managing 6 instruments. Like you need to have a clear process, or you're going to get overwhelmed. You're like, especially as a day trader, because you have to make fast actions. So every instrument can take cognitive, load.
Sure.
So that's a skill set. That's my life goal.
Yeah. So before we wrap it up, is there anything else you'd like to say? Or maybe if you could talk to yourself 10, 15 years ago, what would you say? Any advice you give your younger self?
Oh my God. Honestly, it would be to slow down. As a New Yorker,
I was gonna say you're a New Yorker. That's not easy.
It wasn't. I was at 100. So you're just consuming information, and like you want to see progress so fast because the lifestyle is quick in New York like that. That's taking me, and through meditation, that's part of my morning practice, has slowed me down, and it's helped tremendously because my mind kind of like I can overthink. I can try to do too much at one time. So that would be the best advice, I think. Just take it slow. It really does add up over the years.
Right. Okay. Well, I want to thank you for spending some time with me today and answering some questions, bestowing a lot of great information. Again,
thank you,
you're welcome. Catherine, it's elitechartist.com, or no, sorry, Elite Chartist at Elite Chartist on Twitter is the best way to get a hold of you, right? At Elite Chartist. So we'll definitely keep an eye out for you there. So again, yeah, thank you very much. If you got any questions, you can message me or email me, or you can go ahead and hit her up directly on Twitter, as I said, at Elite Chartist. So I want to thank you again for being here.
Thank you, Brandon. Take care.
All right, thanks.